Good morning, traders. Welcome to Trading Together. I'm Mel Gacee. Today is Wednesday, August the 12th. Wow, it's crazy, right? Just seems like every day is going faster than the one before. Welcome. If you're here this morning, I would love it if you would say hi, drop your name in the chat. This is a fun, interactive place. It's great to know about trading. I'm going to answer any questions or comments you might have. I'm here to help. So there are no dumb questions. There are newbie questions. Just jump in there and I guarantee if you have the question, somebody else has it as well. So don't be shy. Good morning, Maria. Let's take a look at what our charts are saying right now. We opened up the morning with a gap up. Oh, right. Let's see. Elisa is here. Good morning. Shortly down for a small loss. Nothing wrong with that, Maria. Great job. Great job there. So glad that you got out at a small loss. That's a good way to keep your stop losses. It's very important. So good discipline there. All right. We're going to talk about the gap up and the potential gap fill. Right now, we're 16 points away from potentially filling the gap. So let's see if we can get that done. That's going to put us 16, roughly around 771. Let's see. 16. Fives. Basically just at 771, like 0.8 roughly, kind of in, let's see, kind of in this area, roughly in this area. That'll give us a gap fill. I think that's likely, could happen. It is the difference between the close of the previous candle and the open of the next candle. So in a daily scenario, the close of your day versus the open of today's day is what constitutes the gap. And when that gap gets filled, it means that the price, in this case, the price is coming back down to where we were yesterday at the close. All right, getting a little drop here. And I'll show you that on the chart. It's a little easier to visualize it than it is for me to describe it. But gaps can happen on any chart, on any time frame between any two candles. Doesn't have to be daily. Good morning. Good to see you here. Thanks for joining. Our VIX is just lethargic. Absolutely. 14.8 on the VIX. Even with the market slowly kind of grinding down, that's what it's been doing all day, just a slow grind down. The VIX is coming up a little bit, but we are under 15, so pretty wild there on the VIX. All right, Nick was in a very small call when the drop happened, but able to make it back on a put to fill the wick. Great there, Nick. Great job. All right, we are making, it's not really a new low because we had this drop here that Nick is referring to right here, this big crazy wick. But our previous low was sitting right in here, and we have beat that right here. So that low was sitting at 771.7. I think I did my math wrong. That did not fill the gap. I'm doing my math wrong here, guys. I convert SPY to ES in my head, and sometimes I don't do it right. All right. Let's go, guys. Let's go. We have a pre-market wick sitting at 770.8. I think that is a potential target. A lot of times those do fill. We've got volume building down the put chain. Largest volume sitting at 772, followed by 770, then 771, and then 769. So we've got volume building all the way down to 769. On the call side, we've got volume overhead at 773 is our largest, followed by 774 and 775. So that's our range here, and it's kind of matching up with our gamma. We have gamma sitting in the negative, but just by a little bit. Come on, it's taking forever. All right. 317 million in negative net gamma. That's not very much. We've got 4.5 billion sitting on the put side, 4.2 billion sitting on the call side. We've got 774. They moved that call wall down just a little bit. It was sitting at 775, now sitting at 774. And the put wall has been sitting at 769 pretty much all morning. 748 million sitting on that put wall. So heavier hedging there to the put side. And that put wall means we could come down and hit that 769. That is possible. We do see, like I said, we do see the volume coming down there to 769. And we do have an overnight low, a previous day's low at 769. So all of that says we could come down and hit it. We don't have to, but we could. Gamma all over the place today. Yeah, it's been negative for a little while, but not by much, which usually means range. When we see that the gamma is kind of balanced like that, it usually means chop or range, which we are definitely here getting. Chop and range. Even though, it kind of looks like we're dropping from the open, and we are. Lower high, lower high, lower high. Lower low, lower low, lower low. We are dropping slowly. It is still a bit rangy because we're not dropping that much. I mean, 772.3, that's the first low. And then current low, 771.6. Not a lot of difference. So basically, tiny little incremental steps down, which makes it very hard to trade. This type of market is extremely hard to trade. If you've had a rough week, a rough 2 weeks, don't beat yourself up. This is a very challenging market. I'll show you the daily here. And while we're on the daily, I can also show you what I was talking about on the gaps. All right. So here's our daily chart for the SPX. And you can see that for the last 6 or 7 trading days, which is basically a week and a half, we've been in a tight range, floating sideways, not making a new high, not dropping, just going sideways. So what happens when we see this on the daily chart is it translates to this BS on the minute chart. It's usually very challenging to trade because we're just, look at the size of this candle on Monday. Look at the body of the candle. It's ridiculous. How can you trade that? And it's hard. So they're small candles, they're small ranges, we're up and down. It's a whipsaw. You're going to get chopped up if you're not careful, because this is consolidating whipsaw sideways market, both on the daily and on the minute. And that's where, the trading is challenging. They're tiny, tiny moves. There's no volatility. And you get into a trade and you're stuck holding it for hours. And if you're lucky, you get out with a couple of percentage points of profit, if you're lucky. So that's the challenge. Don't feel too beat up if you're struggling. In a market like this, until this consolidation breaks, it's okay to take smaller position sizes and try to get comfortable with what the market is doing, try to get comfortable with these ranges, and take smaller positions, or even sit it out if it looks like one of those days, okay? Nick is master of buying chop and sitting there. Well, we all are, right? Because that's what the market has been handing us. So we buy chop and we sit in it. And that's been very, very challenging to trade. So do not feel too discouraged. It's a tough market. Elisa feeling beat up. I am sorry, Elisa. I know the feeling. I do. Don't take it too personally. It's a tough, tough market. You can see it on the chart right here. Look at it. It's just BS. And these little candles doing nothing but going sideways. But let's get into gaps real quick. I talk about gaps a lot, and so it's important to understand what I'm talking about. Like I said, gaps occur on all charts, on all time frames. They're nothing more than the difference between the previous candle's close and the current candle's open. So on this chart, we see the gaps very clearly. I use the SPX to illustrate gaps because it's just cleaner. You can see it better because of the fact that SPX doesn't run all night. The gaps are much more visible than on a product that does run all night, like the SPY or the ES. So these gaps are much more visible. So you can see the gap here. Here's the close of this candle on August 3rd and the open of this candle on August 4th. Big gap. There's air. You can think of it as a window opening, like you push that window open. That's what these gaps are. They can happen to the upside or the downside. Here's a nice downside gap right there. Big downside gap. So remember, green candles open at the bottom and close at the top because green candles are going up. Think of them like a helium balloon. When we're moving up, the candle is moving up like a balloon. Red candles open at the top and move to the bottom. That's because the price is moving down. So the price opens here, closes here. On the green candles, the price opens here, closes here. Okay. So when we look at gaps, they're not always visible because of that, right? So look at today's gap. You can't see it with the naked eye unless you understand the way candles open and close when they're red or green. So look at yesterday's candle. It opened here and closed here. Now what's the gap? The difference between the previous candle's close and the current day's open. So we closed here at 7728 on the SPX, 7728. And today we opened at 7765. So almost a 40 points gap up. It's hard to see on the chart, right? But here's the close right here at the bottom of that candle. Here's the open right here at the top of this candle. So that is a gap. Even though we're moving down, so you don't really see it, it is a gap. And has the gap filled? No. Because what does the gap have to do to fill? What does the price have to do to fill the gap? It's got to come down here to yesterday's close, right there. That's when the gap fills. Now we are at this point about 18 points away from filling that gap. And most of the time, a daily gap does fill. Not always, but a lot of times it does. So if you see a gap in the morning, up or down, most of the time it's going to fill the same day. Eventually, if it doesn't, eventually it will at some point fill. But a lot of times you'll see the gap fill same day. You can think of gaps as a magnet to price. So when price sees a gap close by, it wants to fill it. It's a vacuum. It gets sucked in there. And again, it doesn't always have to happen. Like if today were a strong pushing up day, that hasn't happened yet. It could. Then it can just leave that gap in the dust. But most of the time, unless we've got some sort of institutional push pre-market, most of the time those gaps are going to get filled the next day. So that's what we're looking for today, is a gap fill, which would put us, like I said, down at 77.28. Okay, I don't think we got a little bit close today. So our low today is 77.37. We got within 9 points of filling the gap. So but no cigar yet. So we've illustrated two things on this chart. We've illustrated this chop range that we're in at the top here, and we've illustrated gaps. So just remember, when it comes to this chop, what could be happening under the surface is we could be getting buying or selling. Usually, so Wyckoff had a theory that when we see consolidation, we are seeing either buying or selling by big money under the hood. Because why? Because big money cannot go in there with a big order, or they will move the market against themselves. For example, if they want to buy some outrageous number, let's say millions, they want to buy millions on the SPY. If they go in there with their millions order, what happens to the market? Boom, it shoots up. They're moving the market against themselves. They want to buy low, sell high. So if they've got millions that they want to buy, and these hedge funds do, millions and billions that they want to buy, are they going to go in there with these $1 million orders and just boom, hit the market? No, they're not going to do that, because they move the market against themselves. So what they will do is they'll buy and sell in chunks, and they'll, have the market return back to equilibrium, and then they'll do it again. And then, it'll get a little blip because they're doing it in chunks. So it'll get a little blip, and then it'll return to equilibrium, and then they'll sell again, or they'll in whatever we're doing, whether we're accumulating or distributing. And I think we're distributing, but I don't have to be right. We could turn and get a big push to the upside, brand new, all-time high. Absolutely could happen. We need a taco tweet. If you've never heard of that, it's the acronym Trump always chickens out. I don't actually believe that, but they use that to describe how his tweets and words manipulate the market or move the market. So if he says Iran has a deal, they're coming to the table. I don't know how many times this has happened. We've had this tweet and the market goes, yay. And then, we hear, some tanker got slammed, Iran attacked something or whatever, and then everything goes woo. And so you see this going back and forth. So, we get a taco tweet or something happens and the market jumps. That could absolutely happen. Or the market could come down. But one thing we know about consolidation is it's building energy. Every time you see consolidation, we're building energy. We come out of consolidation usually with some sort of a spring upward or downward. It's usually a fast move. So usually if we're consolidating for a while and it's been slow, like it has been, no volatility, somewhere at the end of that consolidation, we'll get a quick move or a big move. So that is how that happens. All right. Good morning, Scarface. So good to see you. And Nick saying Taco Tuesday was yesterday. Yes, it was. I want a taco now. That sounds really good. Okay. Back to our charts and just this sideways muck that we've been sitting in all morning long. 772 is where we're sitting. That has been the most favorite level this morning. 772. All right, Dan is here. Good morning, Dan. Could make Trump's speeches a drinking game. Might be less destructive than playing his as market game. Yeah, you're not wrong, Dan. A drinking game might be fun. Every time Trump says we're making a deal with Iran, Or on the other side, he says, we're going to obliterate them. We are going to destroy them on the level that they've never seen before. Like, he talks a good game. But yeah, that would be a fun drinking game, right? Alcohol poisoning is not recommended. I'm with you, Nick. I used to be able to have drinking games. But now I'm happy with a glass of red wine and I call it good. Or green tea in the morning. All right, just sitting here, plugging away, sucking up theta. That's what they're doing. Can't do it with that guy. Yeah, we would get alcohol poisoning if we tried to do a drinking game with Trump. That's for sure. You'd have to haul me off to the hospital. All right, VIX got a little pop here. And woohoo, up to 14.8. Woo! What a pop. Moving up. Let's look at the VIX because the VIX is in the dirt. It is really sinking to its lowest in about 8 or 9 months. So consider that. The VIX is at its lowest in about 9 months. All right, Dan, 3 beers is a heavy drinking night for me. Oh, beers. Or bears, as the case may be if we're trading. All right. Here's our VIX. Let's go over to the daily. I want you to see how much it's being suppressed. And I'll say this, I think the VIX is being suppressed. I think it's really getting pushed down here. And I think we're due for a spike. Now, I've been saying that for days, and all we're doing is dropping. But I do think that we're due for a VIX spike here. I'm just waiting for that shoe to drop. All right. Dan is in SpaceX calls. Good, Dan. SpaceX is climbing today. It's up about 4%, almost 5%. So good. I hope that works out for you. All right, Nick saying, preparing for a put. It just missed a call signal for me. All right, good luck. Good luck, Nick. We want to see this bottom break. It's really been a challenge. It's really been holding this bottom. It's been super challenging. Right in through here. So hopefully it drops. We did, like I said, we did get that tiny pop on the VIX. So, but see how it just keeps dipping, bobbing and weaving like a boxer, bobbing and weaving all day long. In fact, not just all day, for days it's been doing this. So again, back to those of you who've had a rough couple of weeks, don't feel alone. It's been doing this baloney for a long, several days now. All right, let's take a look at this VIX. It is dropping. And let's look at where we were the last time we saw 14.8. So here is the low of today. And where do we see it? Right here in January. That's the last time. Oops, hello. Come back. January, beginning of the year. January 9th, January 12th, right in here. This is where we see that low. Now, at that time, we had seen the lowest low that we'd seen. That was at the end of the year, right at Christmas Eve. We got the low of the low on the VIX. And then right after that, it began this relentless climb. It just climbed and climbed and climbed all the way up. And I drew a trend line there. You can see it. It just would not stop climbing until we hit this high at 35. 35. Okay, that's not as high as the VIX can go, but it's pretty darned high. So we hit that in March. And if we looked at a daily chart on the SPX, you would see a dump there. And then it came up, came back down to reality, came up a little bit and hit another high over here at 31. That happened again in March. So those both happened in March. This was early March. This was later. And then it really started just sinking. So the point I'm making here is that this is the lowest we've seen in 9 months, 8-9 months. That's pretty low. Now, VIX can stay suppressed for a long time. You can see it over here back in 2025. It was suppressed down here, hovering in this 14 for a long time. It can happen. It can sit sideways for a long time, but this is a pretty low. And I did look at volume on the VIX. It looks to me like we do have some volume building in the calls for that expire next week. So I do think we could see a pop here. Now, one thing to remember, even though I think the VIX could pop, I think the market could drop, I think we are going to get that. One thing to remember is that this is a midterm election. It's really, I think, unlikely that they're just going to let the market go before midterms. I think that's virtually impossible. I don't think that's going to happen. I don't think they're going to let it happen. I have a tinfoil hat, and I believe that the market is heavily manipulated. I believe that they are not going to let this market dump before midterms. Now, after midterms, early 2027, I think they could just say, let it burn. But before midterms, I just don't think so. Plus, we also have Anthropic and OpenAI wanting to come to market with their IPOs. So they're not going to want to jump in there with a market that's burning. They're not going to do that. So now, when is liquidity going to dry up? We don't know. We don't know, but I think it will at some point. All right. Nick saying, Brian Shannon says the market can stay irrational longer than you can stay solvent. It's actually an old time trader. If Guy is here this morning, he knows the name, but a lot of people quote that, and it's absolutely true, Nick. It's one of my very favorite market quotes. The market can stay irrational longer than you can stay solvent. That is 100% true. And the market can be wrong all day long, but it's your account that's going to suffer. So guess who's wrong? It's not the market. The market is always right. And if we are not on the right side of the market, then we are wrong. And that's not easy to do with this kind of BS, right? This kind of sideways nonsense. It's not easy to do. All right, let's get back to our cues. We are still holding this bottom here. Did you take that put, Nick? I'm curious. No, it wasn't Jesse Livermore either, although he's one of my very favorite traders of all times. Craig read that both retail and institutional investors have a very low amount of cash on hand, mostly invested, therefore no dry powder left to buy into any dips. I would agree with that, Craig. And we've got to look at the money supply and all of that because there's a bigger picture in that liquidity. But I would probably agree with you that retail is pretty close to tapped out, but we don't know. I'll have to do a little research on that. But I would think that retail is close to tapped out. We're at all-time highs. So, all right. Nick says, hoping the bottom would break on that move. Did you get the put, Nick? Just curious. Oh, you didn't. There's your note. I see it. Okay. Yeah, it did not break. It's holding. This bottom at 771.7 has been holding all day. However, we are not making higher highs either. So we either build this bottom and it pops from here and we make a higher high, or we break the bottom. Until then, it's sideways for more chop. Nick says he's learning. Yes, you are. Good job on not taking that put. All right. And look at the cues. Just an exercise, an example of chop. Nothing but sideways. You can see the bottom really clearly here on the cues. Pretty clear. Okay. Dan saying, how do you find that information that the institutions are tapped out of cash? Well, I think he was saying that retail was tapped out. I don't think the institutions are tapped out. But you can Google it, actually, Dan. There are different things that people watch. The M2 money supply is like the whole supply of the whole country. But they're also by brokers. They have their own measurements of, who's on the sidelines, how much cash is on the sidelines. So there are different ways of measuring it, but you could definitely Google it. AI has become really important to me in my analysis. Although you do have to call it out sometimes. It has a tendency to hallucinate, and I've had to train my AI to only give me current data, and I have to remind it because it just likes to go out there and pull whatever data it can find and doesn't bother to actually find out if it's current or valuable data. So you do have to train your AI, but they've become very handy in my analysis. Tatiana, good morning. All right. So needless to say, I am not interested in new trades inside of this range. I want to see a break of the bottom or a break of the top. We haven't gotten that yet. Great market for selling premium. Not so much for buying. You can see on the cues how strong this bottom is. And we'll go look at volume on the option chart one more time here in a minute. I'm actually going to look at the SPX volume. I've looked at SPY volume. Highest volume on the call side is sitting at 77.50, which is not far from where we are, a little bit overhead. All right, coming back down again. Jeez Louise. And on the put side, let's see, that one was at 44. On the put side, we've got, so the call volume actually, interestingly, is higher on the call side for the SPX than it is for the put side. Our highest volume on the put side is at 77.40, which is right where we are. But we do have volume growing below. So the next highest volume is sitting at 77.20. I think we've already been there. All right, there's a cute drop. And on the call side, next highest is going to be sitting at 77.60. So there's that. All right, nice drop. Looks like a new low on the SPY, except for this piercing wick. And it's definitely a new low on the Qs. It beat that long wick. And here comes our green candle again. Never ends. It never ends. That makes me laugh, Nick, because that is one of the phrases that ticks me off the most. You're right to push back on that. Yeah. Yeah. That is one of AI's favorite phrases. All right, so we got that cute drop and then another bounce. So again, this little game of, hippity hoppity, tiny little lower low, tiny little lower low, and then a pullback. It's very, very hard to trade that. Very hard to trade that. And the other thing we've got going on this morning is semiconductors giving us a nice push. SanDisk up 8.5%, SK Hynix up 8%, Micron up 6%, AMD up 3%, and the SOX, the ETF, the semiconductor ETF, is sitting at 3% elevated, so that's a great push on the SOX. NVIDIA's up 2.7, SMH ETF is up 2.5, so all the semiconductors looking like they are moving upward today, which could be what's keeping us from the drop, is the fact that semis are pushing so nicely. But we've also got mags coming down. So we've got the big names, the Magnificent Seven, pulling down today. So we do have some green. Like I said, NVIDIA was green. I mean, that's about it, right? Yeah, everybody else is red. So looks like Apple down 1.2, Amazon down 1.2, Microsoft down 2%, Tesla down 2.6%, Meta down 2.8%. So these guys are kind of dumping right now. And I think that's what's causing, part of what's causing this imbalance. We've got mega techs dumping and semis charging ahead. So that's, I think, creating the imbalance. So the Qs are down about up about 0.7%, and the SPY is up about 0.1%, which is really just basically flat. All right. Not really going anywhere. So in here, in this last 45 minutes, it's relatively sideways. We need to break this bottom. Come on, guys. Get the lead out. All right, there we go. 77.39 on the SPX. Let's see if the Qs want to jump down and make a new low. There we go. They give us another push up, I swear. Well, I'm sure they will. That's what it's been doing all day long. Just testing this bottom right here at 771.6. We do have, like I said, more volume below. 770 is the next biggest volume. Here we go. Come on now. Come on, guys. Let's go. And there we go with another green candle. No follow through on any of these teeny little drops. No follow through. Just a very teensy, incrementally lower price. And at some point, they'll turn that around, I think. What was our low here? 38. Okay. Yeah, SPX to the moon. Puns intended. Yeah, 141. Nice, nice trade there, Dan. Good on you. You know what I'm going to say, right? Don't stay there too long. Take your profits. I'm sure you're in really nice profit right now. Let's take a quick look at the gamma. It's been sitting in this semi-negative state for a little while. It's growing a little bit to the negative side. Okay. 800 million sitting at 769. So we're still looking at that put wall at 769. Call wall 774 with 369 million. And then another 270 million at 775. So roughly 7 maybe million. Sorry, 700 million versus about 800 million. And then, of course, we've got more building below. So $575 million in negative net gamma. So 4.9 billion in put gamma, 4.3 billion in call gamma for negative net of 575. So that got a little bit bigger, but it hasn't been doing much, honestly. All right, Q's starting another move down. Let's see if the SPY follows. Q's right here at their current low. Just tested it and bounced. SPY is not following yet. Little push here, 77.41 on the SPX. Q's pushing a little bit. There's a push. So Qs are starting to break this pattern. See this downward trend right there? This candle is breaking that trend line. Volume is low. No surprise there. All right. Little red candle here. And coming back up. Looks like the pattern is trying to break, but let's wait and see. Looks like that downward trend pattern is starting to break. There we go. Here we go. Back down again. taken like 10 minutes to move 5 points. Super annoying. And so, one thing to point out when you see this kind of sideways mess, this is only roughly 7 points as it relates to like the SPX. 70 cents, to put that in other terms, on the SPY, 70 cents. This range is roughly 70 cents. So that's teeny, teeny, teeny. That's a super small range. And that is really, these are the zones you want to try to steer clear of, because you're going to see that your indicators are going to give you false signals. So, for example, we see the MACD rolls green right here on this candle. Could we have made a little bit? I don't know. Maybe. Maybe not. Honestly, probably not. And then it comes back and rolls red. Could we have made a little bit on that drop? I think possibly yes. But the idea is they're very small moves, and it's very challenging to make any money. The risk is really much bigger than the reward in this type of environment. So on these types of environment, you just have to be patient. If you're stuck in the trade, you got to wait it out. If you're not in a trade, don't get in, because you want to see that range break before, and decisively, before you make any decisions about a trade. All right. So my plan for the day after saying that is basically waiting for this range to break. What it's been doing is this tiny little step downward to new lows. I, at this point, would not trade a new low unless it's really starting to slide. But every time it's made a new low, it's pulled back. So it's been really hard to trade those new lows. You would have gotten burned if you did. So you've got to be careful with that. So even if we came down, I think at some point we will, that trade would be really difficult, because so far, every single time there's been a bounce, no follow through at all. So that's where you got to be careful. Usually I'll say in a range like this, you wait to trade it, and it's true, but you got to be sure it's not continuing this pattern of new low and bounce, new low and bounce. That's what you got to be careful of. To the upside, I want to see a break of this top right here, and then a break of the VWAP. I might trade a break of this top, possibly. But we've broken the VWAP 1, 2, 3 times so far today. We have not done anything to hold that. So it's come up and come right back down, up, down, up, down. So every time we've attacked the VWAP today, it's been rejected. Now that doesn't mean that that pattern is going to continue. We can break the VWAP and continue on up. Like I keep saying, we're this close to a new all-time high. So at any moment, they can decide, boom, we're going to push, we're going to hit that all-time high. They could do that at any moment. We're just not that far away. What are we? 50 points away from a new all-time high. So again, they can do that in one candle if they wanted to, but very easy to move the market 50 points. That's not hard at all. So, we have to be aware of that. That is something that could happen at any moment. And the other thing that we're waiting for is this big range that we looked at on the daily to break to the up or the down. So again, we could pop it, hit that new all-time high, and then roll over, or we can roll from here. We don't know what's going to happen. But my trading for today is going to be basically, I'm not going to take new lows. I'm not trading those. You've seen that I'm not. And if we beat this high right here, not this one, then I might consider some calls. So that's kind of where I'm at today. Right now, it's just sideways and waiting for me. That's about all I can do for now. And sometimes that's the way the market is, and you're safer sitting on your hands some days than trying to jump into this. This will chop you up. So be careful with sideways trades. Be careful with range. Make sure that you're feeling confident that the range is broken and we have picked a direction. All right, guys, that is going to do it for me today. It was a lot of fun. We will be back again tomorrow at 9:25 Eastern. We have PPI in the morning. Remember, CPI came out today. It came out mild, tame, everything the market wanted to see, because we want the market wants to see the Feds lower the interest rate. And if inflation is screaming, then they're not going to do that. So the inflation did come in mild, and it does in fact give the market hope that we still have a shot at rate cuts. All right. Oh, Jen was here. Good morning, Jen. You are so welcome, guys. Thank you for joining. I'll see you tomorrow at 9:25 Eastern. I appreciate you. Bye for now.